Thank you for joining this month's webinar. We'll start in a few minutes. If you'd like a printed copy of the presentation, please follow the instructions shown on the screen so you can print before our session. If you're attending a live session, there's a brief survey on your screen for you to complete at the end. We appreciate your time in providing that feedback. If you have any questions about this webinar as it relates to your own personal finances, please contact your EY financial planner. If you're attending a live session and have general questions about the content of this webinar, please submit your questions using the Q&A feature on the left side of your screen. We'll also ask you to answer a couple polling questions along the way. I'll be sharing information with you for about 30 minutes today, but the webinar will remain open a bit longer so you can review the frequently asked questions between participants and our financial planners during the session. Please read the disclaimer on this slide. Welcome to today's webinar, Tax Withholding 101. Have you seen your tax withholding lately? It's a good idea to check it at least once a year. You might need to adjust it now and then to make sure you're having an appropriate amount of tax withheld. Over the next half hour or so, we'll talk federal income tax, how it gets calculated, the penalty that gets imposed if you don't pay it on time, and why getting an especially large refund isn't necessarily all it's cracked up to be. Then, we'll help you understand how to fill out the federal W-4 form, which has been revised for 2020. By completing the form properly, your employer will be better able to withhold an accurate amount of tax from each paycheck you receive. Before we start our main discussion, here's a reminder that EY offers tools and resources to help you further explore ideas and information we'll talk about in this webinar, and learn how to achieve and maintain overall financial wellness. Through your employer, you have direct access over the phone to financial planners, like myself, from EY. The EY Navigate Planner line comes at absolutely no cost to you, but it provides something almost priceless: objective, personalized, and confidential financial planning guidance over the phone. At EY, we don't sell any financial products and we don't work on commission. Our sole purpose is to help you make the right decisions on managing your money today and building a plan to realize your goals tomorrow. EY financial planners are ready to assist you Monday through Friday from 9 a.m. to 8 p.m. Eastern Time. EY Navigate Digital offers you web access to a wealth of information on almost every aspect of your financial wellness needs. On the EY Navigate Digital website, you'll find resources to help you set goals and assess your finances. You'll also find user-friendly tools and calculators to help you make decisions and achieve goals, as well as educational content and videos. The number to call the EY Navigate Planner line and the web address for the EY Navigate Digital website are different at each company. To find out the phone number and web address you should use, contact your HR department. Or, if this is a live webinar you're watching, send a chat question. To learn more about these and other EY resources, including additional webinars on a range of personal finance topics, you can print or save to your computer a quick reference EY Resources Guide. The guide appears in the resources list on the left side of your screen. But ultimately, these resources are of little value to you unless you use the knowledge you gain to take action to enhance your financial well-being. During this webinar, we'll suggest a few things you can do to plan for tax withholding. Feel free to think of other steps you might like to take. Keep in mind that a meaningful personal action plan has two key characteristics: a clearly defined series of steps and a time frame for completing each step. And it's important to put your personal action plan in writing. In this webinar, we want to help you get a clearer sense of what may lie ahead for you next tax season. We also want to show you how planning for your taxes can enhance your overall financial wellness. If you want to know your likelihood of getting a federal income tax refund or owing tax with your return next year, it helps to know how your tax is determined. From there, you can estimate what your refund or liability will be. Let's look at the basics of how your refund or liability gets calculated. It all starts with determining your taxable income. In any given tax year, your taxable income is the amount of income used to determine how much tax you owe the government. Basically, here's how your taxable income gets calculated. Take your total or gross income for the year, which may include things like taxable wages, interest, and dividends, and subtract it by any adjustments you're entitled to. Some adjustments are for deductible contributions you've made to certain savings accounts, like a traditional IRA or health savings account, and qualified student loan interest. There are other types of adjustment as well. When you subtract adjustments from your gross income, the result is your adjusted gross income, or AGI. Next, you subtract your AGI by either the standard deduction for your filing status or any itemized deductions you're claiming, such as medical expenses, certain state and local taxes you paid, gifts to charity, and deductible interest you paid. That gives you your taxable income. Next comes calculating any amount of tax due on your income. You multiply your taxable income by corresponding tax rates, which are found in tax tables that are updated and published every year by the IRS. The rates currently range from 10% to 37%. This gives you your initial tax due amount. To that amount, you add in any other taxes you're reporting on IRS Schedule 4. Other taxes may include self-employment tax, unreported Social Security and Medicare tax, alternative minimum tax, or any penalty you owe for early withdrawal from retirement savings. You then subtract any tax credits you're claiming, such as the child tax credit, education credits, or the foreign tax credit. Next, subtract any tax withheld from your pay throughout the year and any quarterly estimated tax payments you've made. We'll talk more about withholding and estimated payments in a few moments. What you end up with is either your net tax due or the amount of any refund owed to you by the IRS. If you receive a refund, it means you overpaid your taxes for the previous year. In other words, your total withholdings and any estimated payments you made throughout the year exceeded what you owed for the year. If you have a payment due, it's because you underpaid your taxes for the previous year. From the standpoint of financial wellness, the best case scenario is to show a zero balance at the end of your tax return, no net tax remaining due, and no refund coming your way. This means you've already paid the exact amount of tax owed on your income for the prior year. In the real world, however, few people end up in that best-case scenario. Most taxpayers either overpay or underpay their taxes, at least by a small amount. Generally, that's to be expected. Owing the IRS less than $1,000 or getting a refund of less than $1,000 is not of any significant financial consequence to many tax filers. However, owing more than $1,000 is generally considered financially problematic. By the same token, receiving a refund of more than $1,000 can also be a sign of less than optimal planning. Here's a polling question for you. Did you owe taxes or receive a refund when you last filed your taxes? I owed less than $1,000. I owed more than $1,000. I received a refund of less than $1,000. I received a refund of more than $1,000. We'll give you 10 seconds to make a selection. Here are the results. Receiving a tax refund can be a good thing, but as we alluded to a moment ago, there are also situations in which it's not a good thing. There are pros and cons to consider. And when we refer to the cons, we're talking mostly about large refunds that exceed the $1,000 threshold we referred to earlier. First, here are the pros of getting a tax refund. A refund can be considered forced savings. In other words, by giving the government more tax than required throughout the year, you're basically putting that money away in a safe place before you've had the chance to spend it. Next tax season, if everything goes according to plan, you'll get that money back in the form of a tax refund. When you receive a refund, you can use the money as a lump sum to invest for goals, like a new car or home, college for your child, or retirement. And of course, getting a tax refund just plain feels good. But let's look at some of the cons of getting a refund, especially if it's over $1,000. As we said, when you get a refund, it means that in the prior year, you basically paid the government more tax than was required on your income. As a result, your monthly cash flow was reduced. Let's say tax is being over-withheld from your pay right now. You may get a refund next year, but think about it. The extra money you're sending to the IRS right now could instead be used to pay down your debt throughout the year. Also, the more tax you have withheld from your pay, the less money you have available to invest and earn interest or benefit from investment growth. It's a lost opportunity. Let's talk more about paying your taxes, but first, a polling question for you. Who, if anyone, do you consult with for tax guidance? A CPA or other tax professional, the EY NPL or other financial professional, family or friends, other, no one. We'll give you 10 seconds to make a selection. Here are the results. Unless you have a tax background, almost everyone could use some professional tax guidance. Without help, you could make some mistakes along the way and end up not only paying more in taxes than you should, but also incurring penalties and interests. The IRS has something called a safe harbor rule for meeting your yearly tax obligation. You must pay federal income tax as you receive income during the year, either through withholding or through quarterly estimated tax payments. If you don't pay enough tax during the year, you might be charged a penalty for underpayment. When you file your return for a given year, you will generally avoid the penalty if the tax payments you made for the year add up to the lesser of 90% of the tax shown on the return you're currently filing, or 100% of the tax shown on the return you filed for the prior year. This percentage is raised to 110% if your prior year's AGI was more than $150,000 or $75,000 for married taxpayers filing separately. Here's an example. When you file your return for 2020, assuming you're a single or joint filer, you will generally avoid the penalty if the tax payments you made for 2020 add up to the lesser of 90% of the tax shown on your 2020 return, or either 100% or 110%, depending on your 2019 filing status and AGI, of the tax shown on the return you filed for 2019. The penalty does not apply if the tax due amount shown on your return is less than $1,000. There are 3 basic ways to pay your taxes. One way is through withholding, based on the federal form W-4 you complete and submit to your employer. Another way is through estimated quarterly tax payments. You need to make estimated tax payments only in certain circumstances in which you have significant taxable income that's not subject to withholding. The third way to pay taxes is by paying any remaining tax balance you owe when you file your return that's due April 15th of each year. Form W-4, the federal form you fill out to tell your employer how much federal income tax to withhold from your pay, has been redesigned for 2020. The redesign is intended to make the form less complex and allow for more accurate withholding. The revised form no longer uses allowances. In the past, each allowance on the form was tied to the number of personal exemptions you claimed, but under the Tax Cuts and Jobs Act, the personal exemption is suspended through 2025. To learn more about the redesigned W-4, visit the IRS web address shown on your screen. When you fill out the redesigned W-4, you should base your decisions of how much tax to have withheld on several factors, such as how frequently you get paid, your tax filing status, how many jobs you hold, if you're married, whether or not your spouse does paid work, how many dependents you have, if any income you have other than the pay you receive from the employer for which you're filling out the W-4, whether you expect to take the standard deduction or itemize on your return, and if you expect to itemize, how much you estimate your total deductions will be, and any extra amount you wish to have withheld from your pay. Guidance is provided on the form to let you know how each of these factors may impact your tax withholding decisions. Be sure to revisit your W-4 at least once a year, or whenever you encounter a situation that might affect your tax situation. For example, you may need to change your withholding if you get married or divorced, welcome a new child to your home, or experience a death in your household, buy or sell a home, get a pay raise or bonus, or realize a significant capital gain or loss on an investment. You might also need to update your W-4 in the event there's a change in tax law. The CARES Act, which was signed into law in early 2020 in response to the economic decline attributed to COVID-19, is one such example of a tax law change that might prompt you to update your tax withholding. Normally, you must itemize deductions to get a tax break for charitable donations, but under the CARES Act, if you end up taking the standard deduction on your 2020 tax return, you'll be able to claim a new above-the-line deduction of up to $300 for cash donations made in 2020. For 2020, the CARES Act suspended the mandatory 20% tax withholding that normally applies to early distributions from a 401k or other workplace retirement plan. You will still owe tax on such a distribution, but the CARES Act lets you elect to spread the tax liability on the distribution over 3 years. The CARES Act provided an advanced recovery rebate of up to $1,200 per adult and $500 per child in each household. However, not everyone who is entitled to the rebate received the full amount owed to them during 2020. To reconcile this, you may be entitled to take a tax credit when you file your 2020 tax return. The CARES Act also temporarily funded an additional $600 per week for anyone who qualified for unemployment. This year, as in every other year, unemployment benefits are taxable as income, which often catches people by surprise. If you feel it may be time to update your W-4, visit irs.gov/W4app to use the site's tax withholding estimator. Your EY financial planner can also help you figure out whether you need to update your withholding. If your planner advises you to update, or if the results you got from the IRS tax withholding estimator indicate that it's time for an update, pick up a new W-4. You can get one on the IRS website. In fact, on the IRS site screen containing the withholding estimator, you'll find links for downloading the form. You can also ask your payroll department for a form. Once you've completed your form, give it to your employer. Many employers allow employees to update their withholding on the employer's payroll site without having to submit a new W-4 form. As we said earlier, if you have significant taxable income that's not subject to withholding, you can, and should, make quarterly estimated payments toward your tax liability to avoid an underpayment penalty. Such income may include interest income, dividends, capital gains, self-employment income, IRA distributions, and certain gambling winnings. Estimated payments should generally be accompanied by IRS Form 1040-ES. Quarterly estimated payments are typically due on the 15th of April, June, and September, with the fourth payment due January 15th of the following year. However, due to COVID-19, for 2020 only, the April and June deadlines were extended to July 15th. April 15th is generally the due date for filing your federal income tax return and paying any remaining balance you owe on your tax for the prior year. If the due date falls on a Saturday, Sunday, or a legal holiday, the due date is the next business day. You have several ways to pay the tax due with your return. For example, you can pay online through electronic funds withdrawal from your bank account. You can pay with a credit or debit card online, either on a desktop computer or by phone or mobile device. You can also pay with cash at an IRS participating retail partner. If you take out a loan or use a credit card to pay your tax, you may incur borrowing fees and interest. It's best to have funds available in checking or savings to pay the full amount you owe, because borrowing for taxes can lead to financial problems down the road. To avoid penalties, try to meet the safe harbor rule we talked about earlier. Now let's look at a couple case studies to help summarize what we've discussed today. Meet Linda. She prefers a do-it-yourself approach to tax planning. Her tax situation is fairly simple. She's single with no dependents and takes the standard deduction instead of itemizing. To see whether her withholding should be updated, she gathers her most recent pay stub and visits irs.gov/W4app, the link for the tax withholding estimator. She uses the estimator and gets her results, which tell her that her withholding should, in fact, be updated. She completes a new W-4 and submits it through her employer's payroll website. She also marks her calendar to remind herself to review her withholding again next year. Now meet Larry. His tax situation is a bit more complex, so he prefers to get help with making withholding decisions. He's a married homeowner with one child and a second on the way. He gathers his and his wife Tara's most recent tax return and their pay stubs and calls his EY financial planner. Based on the planner's guidance, he and Tara submit new W-4s to their employers. Larry makes an appointment with his EY planner to review his and Tara's withholding next year. Think about whether you're a do-it-yourselfer like Linda or a do-it-with-help person like Larry. Either way, it's important to stay in touch with your withholding. So, what are some next steps you can take to use the information we've given you in this webinar? You can get information and guidance by talking over the phone with a financial planner on the EY Navigate Planner line. Here are just a few ways your planner can help. They can discuss your financial goals and any recent or upcoming changes to your tax situation, project your taxes for the current and upcoming years, identify ways to reduce your taxes that are in line with your financial goals, determine appropriate tax withholding in line with your goals, present action steps for changing your withholding, and follow up with you to assist with monitoring and adjusting your withholding. Call your EY financial planner to get started today. You also have access to a wealth of information and guidance on the EY Navigate digital website. Among the resources you'll find on the EY Navigate website are articles on understanding your taxes, filing your taxes, and W-4 withholding, EY's 1040 tax and marginal tax rate calculators, and videos titled Form 1040 Tax Overview and Tax Withholding. You can also go on the website to make an appointment with an EY financial planner. Here's a suggested action step for you. Take advantage of your EY Navigate digital financial planning resources today. We hope you'll commit to taking at least 3 actions after today's workshop. Maybe you'll choose from the potential actions shown on this screen. We've listed: find and review your most recent tax return, get hold of your most recent pay stub, consider your recent and upcoming life events with tax planning in mind, determine your tax withholding goals, use the IRS tax withholding estimator, determine whether you should submit a new W-4 to your employer, use your EY Navigate digital resources, and call the EY Navigate Planner line to get started on your planning. Maybe you'll think of your own actions to take. Just be sure to do something to get started on your path toward greater financial security. Both your employer and EY appreciate your feedback in helping make sure we're meeting your needs. If you're attending a live session, we ask that you please take a couple minutes to complete the short survey on the right side of your screen. You may also request that an EY financial planner contact you directly. If you've submitted a question through the Q&A feature but have not yet received an answer, we'll keep the session open for the next few minutes to ensure that everyone receives a response. Thank you for watching.